Yes, support resistance is still all you need. You look at this stupid chart, ask yourself if you think it's going to go up or down, if it's at a major support resistance level, and you buy if it's at support and sell if it's at resistance. Come on, I'm going to show you. In my free Telegram channel, I posted this yesterday. This is just, I'll put a link in the description and the pinned comment if you want to join. It's just where I call out all my trades for free. So I posted this, it was on USD Canadian dollar yesterday, and price is at a resistance zone. So it's at a major resistance zone here on the weekly chart. I want you to watch how quick it is to do this analysis, okay? So we're clicking through pairs, we're doing this, then we come to USD CAD. Okay, cool. Let's draw the next clear support resistance zone above price, which happens to be right here, and then below price, which happens to be down here. Then all we do is we buy whenever it gets to support, and since it's not at a support zone, we sell when it gets to resistance. We put a stop loss above the zone and then a target below at least a 1-to-1 risk-reward ratio, at least when you're starting. And that's all I do. I don't use Fibonacci, I don't use trend lines, I don't use stochastic oscillators, moving averages, RSI, I don't use anything. I look at the damn chart and I ask myself, do I think it's at a clear enough zone where it might bounce? And if so, how can I participate in that trade with a controlled risk structure? And that is still all you need to do, because virtually all strategies revolve around the same thing. Asking the question, do I think it's going to bounce here at this arbitrary zone in the chart, or do I think it's going to break here? And this is true whether you're using trend lines, right? So, price comes down and the trend line and touches it. Do you think it's going to bounce there or break there? Because that determines whether or not you sell or whether or not you don't sell or whether or not you buy in some cases. Same thing with Fibonacci. Price does a Fibonacci retracement. You ask yourself, is it going to bounce along the 61.8 Fibonacci golden zone? There's all these different strategies, right? Even supply and demand, which I still fail to see how it's any different than support resistance. You're drawing arbitrary regions on a chart that you think price might bounce at, and you're buying if it touches a zone, comes from the top and touches it on the bottom, and you're selling if price comes up to a region and then you think it'll bounce downwards. Go figure. It's just the same old stuff over and over and over again. So this is USD CAD. I am short. I called a trade yesterday in my Discord server, and this is what that trade looked like. So I entered a sell right here, and you can see I put my stop loss above the zone and target below. If you'll look closely, this is a weekly chart here. This is MetaTrader 5 terminal with my broker. And what you'll see, if you look really closely, you can see that I don't even have the zone drawn. It was resistance there, broke above support once, twice there, broke below, found resistance here, and now we're back here to resistance. So currently price is a little bit above this region. Price is just above this little high where we're at right here on the chart. So we're going to see where this goes, but this is what I called yesterday. And check it out. I put my money where my mouth is for this because I'm risking $100,000 on this trade. My trade, the risk per trade really just depends on the trading criteria. I risk an average of 25. Oh, my camera's frozen. Let's see if it comes back. I risk an average of $25,000 to $50,000 per trade. And doing this over the course of the past, it's been almost 6 months since I started this account. Even after this horrible win streak horrible losing streak last week, I'm still up $324,000 before swaps and commissions over the past 6 months since I started this account. I remember every single trade's called live. Every single one of the trades that are in this account, I've been showing this account growth. Since I started the account with a $350,000 deposit months ago, 6 months ago. You see the deposit line, $350,000, and the profit so far. So swaps and commissions are really heavy, but still, it is what it is. And all I do is I do the same thing over and over and over. I had no open trades until I entered this USD CAD trade. And this USD CAD trade currently it's about 30% of the way to the stop loss. The stop loss is basically around this high right here. And what I'm going to do is I'm going to reanalyze if price does in fact get there. And then I will determine whether or not I should enter another sell off of this resistance zone up here, or whether or not I should sit it out. So far right now, I'm just using this little area where these highs are at. And then I'm going to watch and see how the daily candles close and the weekly candles close. So we'll have to see. It's just a little bit above the zone right now. Nothing, in my opinion, to be too concerned about, because price can just spike above the zone or wick above it, and as long as it pushes back down and closes, maybe with 1 or 2 daily candles, and then certainly on the weekly, we'd want to see at least some indecision, if not a straight up bear candle, something like that, something like this big bear candle right here. We're going to see how that occurs this week. So it's enough for USD CAD, right? Very simple trade of sold at resistance, stop above, target below. Let's go to GBP USD because this is a trade that almost set up yesterday. I want you to look at how complicated this analysis is. Prices bounced here at resistance, support, support, dipped a little bit below, came up, found resistance, tried to bounce, didn't make a new low, then it popped right back above. Now we've come back to test as, basically into this zone of support. It's already started to bounce. It didn't go low enough all the way into my alert yesterday, so I did not get a trade on this. However, I do want to buy. And check it out. Look how simple this is. Simple / complicated, depending on your level of intelligence. I put an entry there at the zone, I put a stop loss below the zone, and then I put a target of 1-to-1 risk-reward ratio. Whenever you're setting stop losses based off the weekly chart, you know, whether you're using weekly, daily, or 1 hour, right? You can do this on any time frame. I find it works better on higher time frames. My camera's still frozen. How crazy is that? Wow, cool. So I find it works better on higher time frames like the weekly and the daily chart. So that's why I use these time frames just to mainly structure my trades. I'll still look at the 4 hour and 1 hour, but I just find it works better if I structure everything based on the higher time frames first. So GBP USD, my trade will look something like this if I do end up taking it. As a matter of fact, I don't even think the stop loss needs to be that far. I could probably tighten it up just a little bit. Whenever I'm setting stops, one thing you'll notice is I'm not setting it like so far past the zone where it's like, okay, if price breaks the zone like that, it's probably not going to bounce. I could probably just close it there. I don't need to wait for it to come all the way down here, hundreds of pips away to get out, right? But you're also not going to see me do stuff like this where I put my stop loss, something like that, like just below like the exact wicks of the zone, price points that have been there before. And the reason is just because sometimes price will dip a little bit below the zone before going up. Price is not perfect. I can't believe my camera's still frozen. What the hell's going on? Let me see if I can get it to work. So price is not perfect. So the fact that it doesn't bounce at the zones perfect every single time is okay. It just means that you have to account for that by using a stop loss that is reasonable. And in my opinion, not too close and not too far is what is reasonable. So with that said, this is how I'd structure it, and then I just set the target at a 1-to-1. This gives a pretty easy profit target, right? Because you don't have to be a hero. It's not like you're targeting like, you know, the range high and you're going to be sitting in this trade for weeks or even months. Having just a nice little bounce off the zone, that's all you really need. And this usually for me, it takes a couple days to maybe a week or two is my average trade duration. So yeah, so that's GBP USD, Euro AUD. If we go here to the weekly chart, you can see the zone that I have right here. It's a little bit of a wider zone. You know, I might be able to kind of like pinpoint this a little bit tighter, like something like that. But basically, you can see it bounced here as resistance, bounced again as resistance, broke above, bounced as support, came back. We didn't pause here at all, basically. Like had one weekly candle start to reject, broke below, and now it might come up as resistance and test there before bouncing. That's all I'm looking to do, right? It's not anything complicated. It's just saying like, if price gets to this super arbitrary random region that I've drawn here on the chart, that gives me a place where I can enter a trade. It gives me a location where I can put an invalidation, which is a stop loss for me. It gives me a way that I can structure the lot size in such a way that at that stop loss, I can risk an exact dollar amount that I'm comfortable risking, you know, 25K, 50K, 75K, even 100,000, depending on my confidence in the trade. And then I can set a profit target, which is reasonable, right? For me, it's usually around 1-to-1 risk-reward ratio. Support resistance doesn't work as a way of predicting where price is going to go, but it works great as a risk structure. Like it's very, very useful for structuring risk. Why? Because it gives you a location to enter, gives you a location to get out if you're wrong, and it gives you a reasonable location to look to get out if you're right? Because you can't hold a trade forever. A lot of people say this like stupid thing where it's like, you can't go broke taking profits. Well, I don't know if I completely agree with that, because if you never take profits, will you go broke? I mean, yeah, I mean, it just kind of depends, right? If you never close a trade in profit, what the hell are you doing? Like, right? Like if you just, okay, let's just keep holding our trades more and more and more and more and more. You know, Forex is one of those things where it's not quite like the S&P 500, which just basically goes up forever, right? Despite pullbacks, despite even big pullbacks, the S&P 500 continues to go up. Forex kind of like whips around a lot. It goes back and forth. It's a pretty steady state market. It's a lot more rangy. Things go back and forth, and it's really efficient. You can't just hold trade. I mean, you can hold a trade for like a year, and imagine you hold it for a whole year, and then it comes all the way back, and you end up getting stopped out at break even or hitting the stop loss. But the trade was in a lot of profit first. Okay, so you can't go broke taking profits. I don't know. It just kind of depends on the situation. I like having one-to-one risk reward ratios just because it allows me a very reasonable spot to get out of the trade and profit if I'm right. And if I'm wrong, I just try to close the trade a bit early. Like on this USD CAD trade, if we start closing like on the daily and certainly on the weekly, like above this zone, even if it's halfway to the stop, right? Like instead of losing the whole $100,000 at the stop up here, right? I can just close it maybe if it's halfway there and it breaks above the zone and it closes above all these highs of the support resistance zone. I can just close it, and then now instead of losing 100K, I lose 50K. That's still a lot of money, right? But given in terms of percentage of my total trading capital, it's a lot better to lose 50K than it is to lose 100K, especially if I think the trade's unlikely to work out. So that's what I'm doing. So Euro AUD, we'll see what happens. GBP USD, we'll see what happens if it comes back into here and presents an entry to buy. Euro GBP, I'm also looking for this. This one could take a little bit to play out. This is a daily chart. If we go to the weekly, yeah, I mean, it could take another week or two. And that's if we get like a quick push up to this zone, like something like that or something like this up in here. Because it did happen at these prices where price could get there in a week or two. So I'm just going to be waiting. I've got my alert there on Euro GBP. We've already bounced at this zone. I took a buy on this, I think like 2 weeks ago, 2 or 3. Wait, let's see. So probably like 2 weeks ago. I took a buy on that zone. I didn't catch the whole move, but got a nice little bounce at the zone. Because remember, I take profits pretty quickly. I try to get out at just 1-to-1 risk reward ratio, just because it's a lot easier. I'm not trying to be a hero, catch the next 1,000 pip move or anything like that. So I am just doing that, and we're gonna see what happens. So with that said, that's Euro GBP, USD JPY. This is an interesting one because I'm already short on USD Canadian dollar. But it's the same setup, right? Price is coming up here. I've got an alert set here at the previous high on the weekly. Is there even another? There's no other reference point for this. It's like higher than price has ever been, right? Right here at this little weekly high. So if we get there, I'm not saying we're going to have a huge bounce that goes all the way back here like we did for the past few years. But what I am saying is that, hey, look, it's more than likely, in my opinion, slightly more than 50% likely, that we might have a little bounce right there at the resistance zone. So something like this, right? And guess what? If I'm wrong, which I am about half the time, it'll break above the zone. I'll try to get out of it early. And if I can't, it'll hit the damn stop loss, and that's that. The risk is structured. I've allocated the amount of risk I was comfortable risking based on the quality of the setup and based on the my experience and my intuition and wisdom to decide what is appropriate to risk given the trading opportunity and the contingencies and context. And if I'm right, I'm right, and if I'm wrong, I'm wrong. So we're gonna see what USD JPY does. If she does come up here, I would like to get short. That would be a cool setup, and it would certainly be a quality setup that would be worth taking. Whether it wins or loses, it's still a trade worth taking. But if this sets up like that, USD CAD is likely to go up further, and if USD CAD goes up further, then yeah, I'm likely to lose this trade. But again, if USD CAD goes up further, and it just gets back here to where these previous highs are, and this zone is, I could always just look to re-enter. I'm not quite sure how clean that would be though. So we'd have to wait and see based on the context, but that's what I'll be waiting for in USD JPY. I think it presents a pretty good trading opportunity, especially for just a little bounce away. That could take a week or two at most, usually. USD CHF is the same setup as USD JPY. Basically, I'm just waiting for price to get into this resistance zone along the highs. You'll notice how I didn't put my alert here towards the bottom of the zone, right? So I didn't put my alert there at the bottom. I've got this little blue zone marked up, and all I've done is basically how I construct the zones. It's very simple. I don't do zones like this, right? You can't be too precise for it, because what about all these highs breaking past the zone? Are we just going to ignore those? What about these lows breaking down here below the zone? Are we just going to ignore that? What about all these little wicks that pinned into this region before that area and came down? So what do we got to do? We got to include everyone in the party. We got to increase the zone a little bit up here, give a little bit more room to account for all these highs. Then we got to drag this a little bit down here. And what you get is a zone, not like this, right? Where it's like, all right, price is in the zone, let's sell. And it's like 1,000 pip range. But you get an area like this where it's not quite a line, right? It's not quite a little exact price point on the chart, but it is still a region on the chart where you think, generally speaking, when price gets into this region, it bounces, right? It bounced here support, broke back below, came tested as resistance, tried to break above, failed, got rejected hard, and rejected, you know, with a weekly wick, and then it started going sideways and going down. You just have these kind of general regions, right? And it's the same thing for right here where price just bounced. You have this region where prices bounced, and it's not perfect, right? Sometimes price will stop higher into the zone like that and it'll go up. Sometimes it'll come really low into the zone and then bounce. Sometimes it goes halfway into the zone and then it bounces. You don't want to try to be a hero in terms of like predicting the exact 100% price movement at the exact pip. It's just, trading doesn't work like that in my experience. You know, maybe you're a better trader than me. I will grant you that. Whatever. I suck at trading. The only reason I'm profitable is just because I control risk and structure it really well and make a little bit more when I happen to be right versus what I lose when I happen to be wrong. And so if price gets up here in the resistance zone, you'll notice for my alerts, I don't set them towards the bottom of this zone, and I don't set them towards the top of the zones either, generally speaking, right? Every trading opportunity is different, but as a rule of thumb, I generally set my alerts about halfway into the zones. That just gives me a way to say, hey, look, it's far enough into the zone where, you know, I'm not entering too early, because then you have shit like this where you enter too early, and then it could go all the way up into the zone. And if it just goes and tests the zone, now you're halfway to the stop loss if the stop's above the zone. So I don't do that. But I also don't try to like wait for the exact tip top super peak of the zone unless there's some mitigating circumstances. Like I'm already in like a USD pair, like right now I'm in USD CAD. So it's like in that case I might look to be a little bit more safe because I'm already short on the US dollar. But in something like this, right, about halfway in the zone, that's more than okay, right? Because how would the trade look? Well, if you structure it like that, you know, you'd take a short somewhere around there, right? Maybe it happens to be a little higher or a little bit lower, but you'd take a short somewhere around there when it gets into the zone. Stop loss just has to go above the zone. And then target just gets set at a 1-to-1 risk-reward ratio, tentatively. You can always change this. You can hold it longer if you want. You know, you can modify it after you've been profitable for 6 to 12 months if you like. I mean, if you like negative risk-reward ratios, if that's your thing, or if you like positive risk-reward ratios that are greater than 1-to-1, right? You use 1 to 1.5, 1 to 2, 1 to 3, 1 to 50 for all I care. But 1-to-1 risk-reward ratio is a great place to start. Again, just because it's very simple and it's easy to get experience doing that. And if you have something like this, right, it makes it unlikely for you to get stopped out if price is going to bounce at this zone. Why? Because if it comes up here and then it starts to bounce, okay, cool, you're in profit, great. But if it goes a little bit deeper up here to the previous highs of the zone, and then it bounces there, well, guess what? You're still in the trade. Perfectly fine. You weren't stopped out. And then if it even comes up briefly above the zone, but quickly rejects on the daily and closes back down in the zone with a daily, you know, bearish candle with like a wick, you know, something like that right there, right? Where it pins deep into the zone, rejects away and closes with a big wick like that, showing that it really there's a lot of sell sensitivity at the zone. Well, guess what? You still didn't get stopped out. That's the beauty behind it. And then at any moment that you feel like, okay, I don't think this is going to work out. I've gotten short. I've been in this trade for, you know, maybe a week or two, and it's just going sideways at the zone. It looks like we're closing higher into the zone. Daily candles are closing into the zone. 4-hour candles are closing into the zone, right? You put the totality of the circumstances together, and then you tell yourself, you know, I don't know if this trade's going to work out. And then you just decide to close the trade early, and that's okay. And then you get out, you know, your losers are a little bit smaller than your winners. So even if you're right only half the time, if when you're right, you know, say you're risking $100 per trade, you take 10 trades, you know, let's say you win 5 and you lose 5. Well, on the 5 you win, let's say you win around $100 each. That's $500. But on the ones you lose, let's just say you lose like $75 each, right? I mean, you do the math, right? That's a profitable trading approach, even with fees and commissions, given a long enough time horizon. And if you trade on the higher time frames like daily and weekly, you generally have lower fees and commissions because your position size doesn't have to be as big. Therefore, your commissions will be smaller and your swap fees will be lower because instead of having a big position size trading on the 1 minute and the 10-second time frame, trying to catch like little tiny moves with huge position sizing and crazy commissions, instead of that, you could just use the higher time frames, and then you're catching bigger moves, which means that the lot size is generally smaller, right? Because your stop loss in this case would be like over 100 pips. If you're trading this on like the 15-minute chart and your stop loss is closer like that, like let's say 50 pips or like 30 pips or something, well, yeah, I mean, you're going to have a bigger lot size. It's going to chew up a lot more commissions. Trading the daily and weekly chart, it generally means fewer trades, and it also means you got lower commissions and swap fees. So it's like a win-win-win in every way. It's a great place to start, especially for people that are learning, especially for you if you're not yet profitable. GBP NZD, this is one of the last ones. Very simple. This could take a week or two, maybe even a month to set up. And that's if it even sets up at all. But I'm looking to sell when it gets into the resistance zone. Notice where I set my alert, right? It's not at the lows of the zone, it's not at the highs of the zone, it's about halfway into it, right? It encapsulates the most price action right there, while still giving it the room in case it goes a little higher like it did there, or higher like it did here. It gives us that room, but while still like enabling us to not be entering like way down here before prices even gotten into that region. So basically, you know, like if you zoom out like this, it becomes very clear, hey, if it comes up into here, it might bounce. Cool. Stop loss above, target below. If it bounces, you make some profit. And if it doesn't, you lose some money. Whether you lose the full stop loss or whether you get out of it early, you know, you'll lose some money if you're wrong, and then you'll make a little bit of money if you're right. Just try to make more when you're right versus what you lose when you're wrong. I've got this set here on NZDJPY. I think this was from last week. I don't see a clear opportunity here anymore. So I'm going to leave that alone. NZDUSD, I see nothing right now. AEDJPY, nothing. GJ, nothing. EJ, nothing. GBP CAD, nothing for me. Some of you guys might say, hey, this looks like a support resistance zone, and I think price might go up. The thing is with how hairy all this price action has been, we've had that go down here, this go down here, this go down here. You know, this was a good zone. This was a reasonable area, right? I might have even taken a trade there. I can't remember. You'd have to check in my free Telegram channel and see if I called a trade there. But I might have taken a trade there like a month ago because this is a pretty clear setup. However, you know, when we get into here, we start trying to figure out, like, where's the actual zone, right? And if it was going to bounce, right, it's been 3 weeks. This first weekly candle came here. Second one came in and closed deeper into the zone. Now we got the third weekly candle, like, tried to push down, or we're pushing up right now, painting a bullish wick. It's Tuesday of this week, right? So we've got another, 3.5, 4 days left in this week. What's going to happen? I don't know. The zone looks kind of hairy to me. It looks like it's just less clearly defined. That's why I like stuff like this right here, where we've got a zone like that, and we're going to set our alert right there at the beginning of the zone. Is that what we're going to do? No. Well, how about we set it here at the tip top of the zone, right along the previous high? No. Well, you know what? How about we do it in the middle? The middle's just right. Right there along where it encapsulates enough of the highs, but we're not entering too early, so we're not getting a shitty risk structure. But we're not trying to be a hero and wait for it to come all the way up to the extreme highs and thus maybe missing a trade because it never actually goes up there realistically all the way to the extreme tip of the high. The alert's right there in the middle. So we'll see what happens here on GBP CAD. This is kind of far. I mean, it could take price months to get up here. Perhaps it gets there in like a week or two. You know, we can have some crazy move like that right there where it spiked all the way up there in a week and rejected. Same thing here. It took like 1 week to get there, but it didn't get all the way into the zone. It just got around the previous highs that had recently painted, then bounced. This could take a while. I will be waiting for that, but like, it is what it is. And same thing down here. We're waiting for price to get here so we can like buy it, support. It might get a little bounce there because the last 2 times it's been there, bounced hard as support. And then in this, before that, it bounces resistance, 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 resistance before breaking above. Pretty nicely, clearly defined zone. It's just probably going to take some time for it to get to either one. So a little risk structure there. Euro, Canadian dollar, nothing. EU, we could bounce here at this support, but I think that since price failed to go higher right here and tried to make a new high but strongly failed, I actually think we're going to be coming down here and maybe breaking this zone. It's just a part of intuition and experience. You can still take trades off of things like this just because they're technically setups. But after you get more experience, you can use your experience to kind of like start being selectively, let's just say more selectively, I don't know. I need to finish my coffee before I can come up with words to describe it. You just have to be more damn selective. There we go. We're going to say it raw and straightforward. You got to be more damn selective. Price, it broke above this zone, tested a support, tried to go up and make a high, failed. Tried to get higher, but just didn't go up higher. Okay, so we come back, we try to go up again, we fail right there. Okay, now we have a strong move, right? January of this year, we push up, then boom, we break above the zone, but then we reject really strongly, close with a wick. Then we go sideways here, price tries to, rally up and go, we fail. We come back into support. We try to bounce here, and then after it tries to bounce here, right, we had 1 week where it went up, last week was down, and then this current candle for this week is bearish coming down. We've had so many opportunities to try to go up and cross these highs and hold above, and it's just failed. So all that context makes me think, all right, dude, we're coming here. We already tried to bounce a little bit. I would call that almost a dead cat bounce, where it just gets there, barely bounces, it just comes straight back. Not very compelling to me. So I actually think this is going to be going lower. Where would I buy next? I really don't know. This zone looks decent on Euro USD. It's very similar to GBP CAD. It could just take a while to get there. So let me go ahead and just set an alert here. Again, this is probably something that, if it even gets there at all, which it might not. Maybe it bounces here and goes up and I'm completely wrong. But if it does get there, this could take like weeks to get here, right? It could take like, honestly, like a month, 2 months, 3 months. We'll just have to see based on the higher time frames. But this would be a pretty decent trade. It's a pretty nice clear zone, right? Prices bounce here as resistance a bunch. Bounces support once really clearly. I mean, just look how pinpoint accurate it is. And all you have to do is sit there and just wait. You have to just be patient and wait. Resistance, 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 resistance. If temporarily is resistance there with that wick before then breaking above, coming back, testing as support, continuing higher. Cool. I like it. I'll wait for it. It's just a matter of time, right? So yeah, I think it'll break this zone. I currently am not using it to base any trades off of. We'll see what EU does. GBP AUD, I got nothing. CAD JPY, very similar to USD JPY. I'm just waiting for it to get to the previous high to bounce there. I don't have the zone marked up because of how clear and obvious it is, but again, it's a very similar setup to USD JPY. If price gets up there, I'll be looking to sell. AUD USD, I got nothing so far. AUD CAD, I got nothing right now. Some of you may disagree, but I got nothing for me personally. CHF JPY is in a straight bull run. I'm not very inclined to sell, even if it looks like it's going to sell. All the other millions of times it looked like it was going to sell off, since the past half a decade, it's always gone higher. Sell-offs were short-lived. And that's it for Forex. That is all. And if we're going to crypto, I use the same exact approach in crypto I use in Forex trading. The only thing with crypto, it's more like a long-term hold type of thing. Just because the percentage gains when you're right, it's huge. And then when you're wrong, right, you just lose a portion of your capital. If price goes from Solana back here to the previous highs, because I've got over $1 million worth of Solana right now, over $1 million worth of Solana. If price goes back to just its recent highs, it was at just a couple months ago, like 6, 7, 8 months ago. That's a 200% gain. That's a 3x, right? So if I have let's say 1.2 million, this goes up there all the way back to 240, 250. I'm gonna have 3.6 million worth of Solana. That's pretty crazy, right? It's just over a $2 million profit. And same thing on Bitcoin. I don't have a lot of Bitcoin right now. I barely have any, but I basically have put most of it in Solana because risk adjusted is just better. If Bitcoin runs all the way back to its recent highs where it was at last year, 90% gain, right? It's about a 2x. It's about 100% gain. But Solana, if it gets all the way to these previous highs, right? And why? Why there? Because it's a damn resistance zone. That's why. If we get all the way back up there during the next bull run, right? Because if Bitcoin goes to the all-time highs, Solana is likely going to follow it pretty closely, right? That's just what happens in crypto. Go look at the damn charts. Same thing over and over. This will present, I can make double the amount of profit, right? So instead of 100% growth, I can make 200% growth. And Solana, I think, is the best risk-adjusted altcoin, right behind, basically Ethereum. I don't have any Ethereum. I like Solana. I feel like the chain's better. I just like it better. But on top of that, look how clear the support resistance zones here are on the weekly. Whenever you draw these up, price just bounces around. It bounces support, resistance twice, bounces support here, broke below, broke back above, bounces support, support up here, support, support. We bounced here temporarily a couple months ago, failed, came down here to this next zone, tried to bounce the support here a little bit. Now we're coming back into the zone. I just accumulate whenever price is going down. A lot of you guys remember from last year, and I think it was July, August of last year, I sold a lot of my Solana. I actually sold all of it. I sold all my holdings. I posted this in Telegram, and I believe I made a couple YouTube videos about it. I actually showed my portfolio and everything. When price came up here into the resistance zone, started to bounce away. So I was out at, I think, 238, 240. So right around here, just because it was at that resistance. And as it started to go and bounce away from the zone, I ended up selling it all. So it was all right here around these prices. And then when we came back down here and bounced really hard, I went to this and I started buying here around 180. So I bought a block there, small block. We came lower, bought another small block here at the support resistance zone. And then whenever we broke back down here, I bought my third block of positions 3 months ago. When was this? January? Yeah, so about 3 months ago. So 2-3 months ago. And now I'm just holding it. We're waiting on the next bull run. If we go down, I'll lose money. And if we go back up, I'll make more money. It's risk adjusted. It's the same way. And it revolves around the same simple concepts of support resistance on higher time frames as with any market. So that is my analysis for today. All eyes on USD Canadian dollar to see where it goes, as well as all these little potential setups that could happen this week or next week or the week after or the week after or the week after. It's the same stuff over and over and over again. My camera's not working, so I cannot blow you a kiss goodbye visually on the camera. My phone just decided to stop working. But if you liked this video and you did hit the like button, thank you. I appreciate that. That really helps out the video and it helps get this video out to more people. And, again, if you're going to check out my free Telegram channel, it's just a link in the description. I'll put it in the pinned comment too. You can join it. It takes you like 5 seconds to join it. Check it out. I just post all my analysis and trades in here every day. All my P&L, my stats, my updates, things like that. So feel free to check it out. It's just a way where you can just follow my trades live for free every day. With that being said, I'll see you in the next video, guys. Happy trading. Remember, support resistance is king. Nothing I have found works better. Do your best.